This episode is brought to you by Valora. Valora is a self-custody, mobile-first wallet and the easiest way to send, swap, collect, and purchase digital goods on the Celo blockchain. Download the app and start exploring today at valoraapp.com/empire. All right, everyone. Welcome back to another episode of Empire. We have, I thought we were going to have a glasses-less Santi today, but alas, here we are. Just a normal Santi.
I could go glasses because, folks, I don't read off the script, which is probably explains how sometimes I just butcher these episodes. But no, for the most part, I have astigmatism, which means I can't read like when I can't drive at night without glasses. It's almost like, like you're drunk. You actually get fined. Like insurance doesn't cover me if I don't have my glasses. And looking at a computer screen, so it's like this light stuff that I can't. Like it's just really blurry. So, anyways,
you got to give me a fresh pair of glasses, man. I've been wearing contacts since the first grade. I have negative. Anyone who has bad eyesight will understand what this means, but I have negative 7.5 eyesight, which is really bad. That's really bad.
Yeah. Well, maybe in Austin, I do have this company that does it. I always get my friends.
You got a guy? You got a guy for that?
Yeah, I always get a guy.
You got a guy.
It's a bit mainstream, but I got a guy.
You got a guy. Love that. You're not shopping at Warby no more.
No, Oliver Peoples used to, no longer. No Warby. Yeah, I've gone through all of those. So
what's the go-to glasses brand these days? Should we give someone a nice plug? Or no free ads?
I love the Leak Alpha. In this particular case, I will not.
No free ads, baby. How you doing?
Big week. I wouldn't say there's a ton going on, but there was some pretty interesting stuff. I've talked to a lot of folks recently. I'm feeling pretty good. I'm pretty much unchanged from last week, nice. But some interesting developments. How are you feeling?
Feeling good. We had Blockworks beers last night. Fun event. Oh, yeah. So Blockworks started out as a company, pre-media, pre-newsletters, pre-podcast, any of that, just by hosting. Our first ever thing that we did was host these 6 to 10 p.m. happy hours in New York. And like, that's how Blockworks started. And then like, as we started to monetize them and like turn those into like a real conference business, we started just hosting these things called Blockworks beers for the community in New York. And we stopped doing them in 2019. And I was with one of our sales guys, this guy, Max, at ETH Denver. And we were meeting with a bunch of folks and they were like, look, there's like no New York crypto scene. There's like no like place for us to come together that's not a big conference. And I was like, oh, we used to do these things, Blockworks beers. And Max was like, let's bring them back. So we brought it back and it was cool. We tweeted it out once. We had 250 people register and had like probably 150 people came out last night. And
oh, wow. Where was that, by the way?
We rented some bar. You can do these like weird deals with bars in New York, I think everywhere, where you're like, if we bring at least 100 people, you give us the space for free. It's a Wednesday night, so you'll usually have minimal traffic. Yeah,
nice. Galaxy used to do these back in the day. Like I remember going to these like 2016, 17.
Yeah, Galaxy did them at
their office.
No, Oh, okay. Well, I'm thinking of a different one. I'm thinking of the ones that they did on like Thursday or Friday nights in New York, where it was at the restaurant and it turned into the club. And
I wasn't. I may have gone to one of those, but no, I think these were in their offices. Yeah.
Oh man, New Yorkers will know what I'm talking about. I think Novogratz ended up buying the restaurant that they hosted them at.
Not surprising.
Yeah. But no, it was good. It was a good event. A lot of people to Empire there. That was cool. Got to meet a lot of the listeners, and basically everyone just told me how much better our show is than Mike's podcast on the margin. That was kind of the consensus. But we already knew that.
Mike, we feel for you, but keep doing what you're doing. Yeah. We were there at one point once.
We were there. I do have good podcast news, actually. So we had this big announcement and like big podcast drop of another show called 1000X, which is hosted by Avi Feldman and Jonah. And we launched it on the Empire feed, and it's a show like for traders, by traders. And we did one episode, and then the compliance teams came down hard on us, and not Blockworks compliance, but some other compliance folks. And so we had to pause the show. But the good news is that 1000X is coming back. You can find it on the Empire feed. Fingers crossed for episode 2, first episode in a while of 1000X drops on Thursday. So next Thursday, 1000X coming back. You can find it on the Empire feed.
Very nice. That's cool.
Yeah.
We'll save all the tips and trading advice, which I'm never good at, to those folks, which are much smarter.
Yeah, exactly. Yeah, the big brain traders. So, let's start with Gary Gensler.
Sure. Yeah.
Cool. Did you watch okay, so a little bit of background. The House Financial Services Committee hosted SEC Chair Gary Gensler on Tuesday morning to discuss a whole bunch of stuff. So we were obviously focused on the crypto side of things, but it was a bigger conversation around climate change and ESG and just like what Garry and the SEC have kind of like done in a bunch of different like new and emerging areas. So they're discussing the agency's response to crypto regulation, investor protection, security classification, ESG mandates. There were some pretty interesting and some pretty like whiffed on answers, I would say, that Garry had. But what was your take from either speaking to people who I know that you know or like kind of close to the scene there, or just from watching this? What was your initial reaction?
So, okay, my first impression was obviously seeing what most people saw on Twitter, crypto Twitter, which is a few of the clips where he's being particularly asked if this is security a number of times, and he doesn't basically provide an answer. Then there's another clip that was going around, which basically, he gets asked a bunch of yes or no questions he never answers, and basically talks about how he's like, innovations going to China, and he's not providing any clarity. A lot of the stuff that we've heard from a lot of folks. And so when looked at that, you would have thought, hey, listen, like, it didn't go very well for him. And then surprisingly, I spoke with another person that I consider to be one of the more kind of preeminent experts closest to what's going on. And their take and interpretation was, like if you just look at those two clips, it looks really, like a win for crypto. But by and large, I was surprised to hear that wasn't their opinion, that he actually was very calm, even though he was shaking at times. And, it was just part of his strategy. So that candidly caught me off guard. And we're going to dig deeper into this probably in the next week or two. We're going to have a regulatory segment kind of on a quarterly basis, maybe more often depending on how things progress. But I do want to, that was all I heard. And I didn't really probe much. This person didn't have much time, but yeah, I don't know if you felt that way, because the consensus seems to be this was a huge win for crypto. Look how regulators or like congressmen really are pro crypto, and they're aware that he's not doing a good job and hasn't provided clarity for the space, which is really driving innovation elsewhere. So I don't know what if that's your take, or if you heard anything differently.
From folks outside of crypto, I heard that it didn't. So like my initial take was, wow, Garry really, really whiffed on this. Like this was a complete botch. Kind of like we got him. But folks who I spoke to outside of crypto, just in kind of like traditional capital markets world, were like, yeah, these things are usually a snooze fest. This was more interesting than usual, but like it was still a snooze fest, and like there was nothing really important that was said. I thought some of the House Republicans came down super strong on him and like did a good job basically, and like I think really pushed him. And I think it's abundantly here's my one sentence takeaway is that if it wasn't clear before, it's now abundantly clear that the SEC, specifically the SEC under Gensler, intends to clamp down, maybe even shut down most crypto related business in the United States. And this includes exchanges, on and off ramps, really anything that's, I mean, he's just very anti-crypto. I mean, he said that he said that nearly every token is a security, completely waffled on the ETH response. I don't know. It was pretty frustrating. Like I was watching this and he had that one response where someone asked him if he had ever held crypto. And he said he's never held crypto. He's never bought crypto and he's never used a crypto protocol. And man, that was just a bummer to hear, because that's like having a regulator in the 90s or the 80s say you have to use snail mail, but then admit to never using email, And it's like, if you would just use this stuff, like go make a trade on Uniswap, go make a $5 trade on Uniswap and see how cool of an experience it is. Go buy an NFT on OpenSea and just like see what it feels like.
Yeah.
So yeah,
That
it's
is
pretty maddening.
yeah, I saw your tweet. I mean, that is perhaps one of the most surprising things, right? He even taught a course in MIT. I'm like, guys, like, why even go to college at this point? Like, I mean, this is the whole problem that I had in college. It's like, how can someone teach you about risk or something of investing if they haven't invested themselves? Like, I feel like this is a common thing too among like economic professors, finance professors. A lot of them certainly come from industry. A lot of them are also just really so risk averse that they haven't even like touched the stock. And I'm like, well, am I going to really learn from these people? Let alone like how are these guys like in charge and trying to drive some sort of policy making? So, yeah, very disappointing, candidly. It also
Yeah.
almost makes you question like how do these people actually get to office in the first place? And the interesting thing was I think when he first got appointed, um, everyone in crypto was very encouraging. He's like, oh, this guy like taught a course at MIT, like he's going to be very pro, crypto, and it's been nothing but right. And so, yeah,
Yeah.
it's a
There were
good
a couple.
segue. I think I was going to
Yeah.
say it was a good segue because this week also, to your point around, I think it's abundantly clear his stance and his kind of intentions towards really continue to clamp down on the crypto industry. What Coinbase has done recently, today announcing that they've acquired a license to operate in Bermuda. They also, I think Brian was in London meeting with, high-ranking UK officials to talk about his plans and plans of Coinbase to kind of continue to operate in the UK. And then, there's a bill passed in the European Union Parliament. So we can talk about all of that in this broader context of what's going on in the regulatory world.
Yeah, I think Coinbase had a really smart move this week, and I want to get into that in a second. But the Gensler hearing, do you like when you see this? Do you think anything will end up I think for us, like in crypto land, we see this and we're like, man, this was maddening. This was, he completely botched the answer around like is ETH a security or a commodity? There were some like remarkable. I think Tom Emmer did a great job. McHenry really grilled him. Emmer kind of took Gensler to court in terms of like his favorable approach to FTX, the impossibly high cost of compliance that they've put on the crypto industry, the lack of new rulemaking for crypto, combined with these like 55 enforcement actions they've taken, his kind of like rogue actions outside of congressional authority, like really took him to court here. Do you think that they're like, well, I guess we'll have to ask Travinsky and Rebecca Reddig when they come on the podcast soon, but do you think this changes anything, or this is kind of a nothing burger for you?
I don't know. Part of me wants to believe that perhaps 2 years ago, 3 years ago, we wouldn't have had this type of, hearing where, you had like Hester Pierce and maybe one or two other, officials that were kind of really out there talking about crypto, pro crypto. But now I think what's different now is that you do have one, it's getting a lot of attention, whether people listen to it
Yeah.
or tuning into it, probably not, right? But nonetheless, I think you have elected officials like congressmen really paying attention to this stuff because their constituents care about it. I gotta believe that the reason why we have 2, 3, 4 kind of elected officials really bring this to light and issue a motion to like kind of replace the chairman of the SEC. Is largely driven by someone more junior in his staff saying, hey, this is a really important topic for our constituent base.
Yeah.
So is it going to matter? I don't know. I'm not a political expert. I think it's going to matter more than it has before, which is kind of a meh answer. But my hope is that in the next election cycle, it certainly bears more weight.
Yeah. No, I agree with you. You have Tom Emmer coming down hard, and he's the House Majority Whip. So it's
yeah,
just,
that's a great point. It's like not the fact that he's the whip. It's important, right? It's not like a random or less. I think that carries more weight.
Yeah.
I'd say.
Yeah. It's pretty remarkable that the political objectives of the chair of one of these three-letter agencies can start to just put companies out of business. Like I mean, I want to talk about Coinbase and their push into like Bermuda, and like they're meeting into uh they're meeting with the UK, like you mentioned. But like, here's what doesn't make sense to me. Like, how is it even possible for so the SEC approved Coinbase to go public, and now they're coming back a year later or 2 years later and saying that they're operating illegally, right? Like, that has implications not just for Coinbase, but for investors in the public markets, right? Why are you allowed? Why did they let me buy coin stock, for example, but then now they're saying that they're operating illegally, right? Like, how's that changed, and why are we letting the political agenda of the
Mhm.
SEC chair impact these public companies?
Yeah, I think one of the more important statements from one of these folks was the role of the SEC should be to create and incentivize capital formation and robust capital markets. And to your point just now, that really is very concerning because it sets a precedent of not only, let's forget about crypto here for a second, just normal companies. Like some of the other topics that were discussed was ESG. Um, I'm not particularly an expert on what Gensler's policies towards ESG have been, but that was also a big topic of discussion in the sense that it's created kind of this, it has harmed capital markets. And by that, I think it's what the regulator should really be focused on is being, and historically what makes the US great is it's a system that works, it's predictable, it has a rule of law that has multiple checks and balances. And by and large, that gives investors and civilians and whatnot greater sense of security and certainty relative to other places in the world. If that all of a sudden gets put in question, then you're going to go elsewhere. Like the European Union or the UK are going to look at that, and I think are looking at that and saying there's a big opportunity for us to be more relevant in the global scale on the innovation front, on attracting investors and capital formation. And so, I mentioned this before in this podcast, and I would love to talk about it in the regulatory pod in the coming weeks. In the approval of the gold ETF, uh, you know, I guess decades ago, the US was very much against approving a gold ETF. And European regulators approved it first, I believe. And then the US saw that there was at a big disadvantage and then approved the gold ETF in local markets. I wouldn't be surprised if the same happens in crypto regulation. And I think you're starting to see it just today,
Mhm.
where UK and EU regulators um, are providing a greater sense of clarity and process service providers, companies, investors, whatnot to operate. And that I think is going to matter significantly. That might be really the tipping point of what really pushes the US in a more pro crypto stance. And when I say pro crypto, it's not that, tomorrow they're going to come out saying, like, look, nothing's a security or whatever. It's more just the lack of certainty is really what's the biggest problem here. And it's very, I think, uncharacteristic of the US because most of the time you have a lot of certainty in the US, not in other places. And in this particular case, you're not. And so that I think is a new,
Yeah.
whether you want to bucket that in a broader narrative of like the US dollar debasement and the fall of the like, I don't want to get there. I think that's, too far fetched. But it's certainly impacting today. And you're seeing with the, Coinbase is not a small company, right? It employs a bunch of
Yeah.
people, and so it's going elsewhere.
Yeah. I mean, also today you had the MICA, which is the landmark EU crypto regulation, officially just passed the plenary of the EU Parliament. So I think we will see that continue to happen.
On that point, and I'm not an expert on this because I haven't. There's a great Coinbase policy guy that is covering this in particular, and he was supposed to come up with a thread. I haven't seen it, but when that goes, I hope we'll link it in the show notes. Maybe we'll have him on as well to talk about this. It feels like there's a lot of things that are still going to have to be defined in this bill, but at least
Here's my
go ahead.
understanding of the MICA is that like we don't actually know what the regulations. I think it's like step one, but like the one line summary of this is that one of the world's largest markets, the EU, is introducing regulations for crypto to protect users and support innovation. And this is, I think, what we're waiting for in the US now, which is like folks are saying, look, if you want to introduce things that will kind of clamp down on crypto, that's fine. That's totally fine at this point. Just but give us the hard line, give us the details, basically. So I think that's what I think that's why this MICA bill and the European Parliament voting for it and pushing it through is important, is because like they're pushing through really clear guidelines that say this is, if you're building a crypto company, this is how you have to operate. And I think that's
absolutely. Perhaps went unnoticed by a bunch of folks, but Hong Kong also now recognizes crypto as property, and so that was an interesting development as well. Just goes to show, places like Hong Kong, Dubai have really, I think, recognized an opportunity to attract founders and capital that is in crypto.
This episode is brought to you by Valora, the ultimate wallet for exploring the Celo ecosystem. You can easily access over 50 different crypto assets and over 30 different dApps for swapping, sending, and growing your crypto, all from your mobile phone. Their global app is localized into 13 different languages. It's available in over 100 different countries, which gives you, the listener, and the crypto explorer everywhere a simple and easy way to send payments, purchase digital goods, and access DeFi and refi apps. A refi app is an app like the Toucan protocol, which is a platform that helps you take climate action by easily buying, retiring, or building with carbon credits. Super cool. So download the Valora app today at valoraApp.com/empire. VALORA app, APP, valoraApp.com/empire. All right. Let's talk about that Coinbase news. So this week also Coinbase was granted a license to operate in the offshore financial haven of Bermuda as it seeks to diversify its business outside the US. Coinbase is trying to establish an offshore derivatives exchange in Bermuda, which is a British territory, to offer perpetual swaps, to offer perps, which have historically been inaccessible in the US due to pretty tight regulatory restrictions. So I'm curious what you make of this push.
Yeah, I mean, I think whether they're going to fill a void that FTX used to have, I don't know. But yeah, it's pretty interesting that they're moving this direction. And I think some people are speculating that they'll move entirely out of the US. I don't know how that will actually happen. But nonetheless, I mean, I think as part of the lawsuit, you got to think that they're hedging and building multiple avenues in case it really becomes difficult to operate in the US.
Yeah. So on Tuesday, Brian Armstrong was at the Innovate Finance Global Summit. I think that's what it's called. And someone asked him a question about relocating. Like, could they relocate Coinbase outside the US? And he said, look, anything's on the table at this point.
Yeah. Yeah.
So,
have you heard anything specifically on the loss, on the kind of the court date for this Wells notice that they received?
No, I haven't. But I heard that the SEC is incredibly over. I talked to someone who's very junior there, but they did say that like they're very overwhelmed because they're very overwhelmed at the fight that both Ripple and Coinbase are throwing at them. They're trying to stack some wins, and like basically because Ripple and Coinbase are fighting them so hard, it's taking up everyone who knows about crypto at the SEC is now being put on the Coinbase and Ripple like kind of task force. So I just heard they're overwhelmed with work right now.
Well, I mean, to your point, I do believe that because they also recently launched what was it, a enforcement action or against Bittrex. So this is like 2 years late. Is like a complaint of sorts. And so yeah, I think they're slowly working their way through the stack, perhaps even trying to get easy wins. But
do you think this was a smart move for Coinbase? Because on one hand, the US is like openly at war with crypto, right? And it's kind of like, what other choice does Coinbase have? On the other hand, this like offshore derivatives exchange is very like off-brand for Coinbase, I would say. Coinbase has been like kind of trusted, reputable brand. And when I hear like offshore perps exchange, I'm like, ooh, that's like kind of BitMEX-y vibes, It's not really a great, like, it's not really what I would think of when I think of Coinbase. So like, what do you think of this move in general?
Well, first of all, I think the U.S. saying that the U.S. is at war with crypto is an unfair statement. It's let's not confuse the stance of a particular individual with that of the U.S. because you saw the whip, and I mean, I think there's a lot of political capital that is behind crypto, and sometimes it's difficult, and I don't want to conflate it with. I fundamentally, part of me believes, and I'm optimistic that the U.S. will change course because this country is just built on innovation, and I think there's a reason why Silicon Valley thrived here, and I think we'll look back at this as like 2-year, 3-year blip where, one particular individual, one particular, like under a particular administration, it wasn't pro particular, crypto, but that's, I don't know, it's a big generalization. So, but yeah, no, you're back to the more important point. I don't think it's going to hurt their credibility. Obviously, people think about, oh, look, FTX was operating in Bermuda, like, whether we want to, like, I feel like it's unfair to say that's going to hurt Coinbase reputation. If anything, they're taking advantage of a huge void in the market. Like we talked about in another episode, someone's going to come in and fill this gap that FTX had.
What the perps market cap?
Yeah.
Yeah.
I mean, look, Binance is doing this. There's talks now.
I mean, if you want to, yeah, go ahead.
Like they're trying to relaunch FTX, like Tribe Capital and a few of the existing investors. God. Look, I've seen crazy. I don't want to dismiss like anything here because is it possible that they relaunch it and it works? Yeah. Like, is it possible that we'll all get our money back? Yeah. I mean, crypto's rallied, right? So, like, a lot of things are possible. But let me ask you a question: What would you rather? Where would you rather trade on? A relaunched FTX with God knows which management, or Coinbase?
Coinbase. Okay. Yeah, obviously. Yeah. I mean, yeah, I think this is great for the perps market, right? Like if it'll be, I was thinking about what would happen to the market just if Binance disappeared, right? And there's really no good options. Either you go kind of with the like Bybit OKX crew, or you go where kind of like the liquidity sucks, which is like the Bitfinex, Deribit, BitMEX, or like the KuCoin crowd, and you can go on chain, like you could use Quenta. But good to have that cross-chain collateral.
I don't think it hurts their reputation at all. I think it's just increasing their product suite, and
So you're pro this move. This feels like an aggressive move. Also, Coinbase tweeted out that they're going through this 8-week international expansion drive.
Yeah.
Cool. I think this is. I like it.
In many ways, it's like no different than like if you look at it at a state level, like gambling is illegal in some states, but not others. Like to say that like one company expands into another state because one, you know what I mean? You don't have. You're basically saying if this is negative for Coinbase, you're either thinking that because it went offshore, every other company that's gone offshore all of a sudden is sketchy, which is not true, or that perps and these like products are inherently bad and toxic, which also is not true in my opinion, because it just adds to market structure and robustness and liquidity. Like it allows for the capital formation that is important for just market structure.
Yeah.
That's it.
Yeah. US regulators, politicians got to get it together. I feel like they're just fumbling the bag, pushing someone like Coinbase offshore. I think has the opportunity to be one of the most historic companies of this generation, and we're pushing them offshore. So definitely fumbling the bag. Other things that are interesting this week is definitely a slow news week. Flashbots launched MEV Share. So the highlight of this is I can just read the kind of news summary and then give my quick take, which is that Flashbots introduced the beta version of the MEV Share protocol, which is a permissionless matchmaking protocol. It allows users and searchers to collaborate together and for users to get paid for the MEV that they create. MEV Share, if you know MEV Boost on, it kind of builds on MEV Boost to just continue unbundling the transaction supply chain. And my understanding of MEV Boost was that it kind of enabled this collaboration between the validators and the builders, and that MEV Share does the same, but for searchers and users. Key takeaway here is that I think this is going to be a big theme this year, and we're just going to continue seeing like different ways to. There are two ways to handle MEV. There's like the MEV take, which is that you should try to get MEV out of the system and like try to minimize MEV. And then there's the MEV take, which is that you should try to just say that like, okay, MEV is a thing, and we should try to figure out ways to get the MEV back to the user. And MEV Share is the latter. This is a protocol from Flashbots that is designed to hand some of the power back to the users. And my understanding is that now more and more MEV that's generated by a user's transaction will be, as much of that as possible, will be returned back to them. So,
yeah, pretty cool stuff what those guys are up to. Should we talk about something that I think is a few folks on ease, which is Tay from MetaMask recently, or there's a few threads that are going on from her that is just there's an ongoing exploit, and the source of it is still unknown. It has been targeting wallets across 11 different chains, I believe. And they haven't really pinpointed the common denominator or attack vector here. It seems like, and we'll link to this thread. I mean, she initially posted over the week, and I think if you like listed a number of wallets and said, hey, if you're the person behind this wallet, get in touch with us. Yeah. And then of course it then escalated further and said, look, there's an ongoing like draining of these wallets. It's happening. It included OGs in the space, included people that are pretty beefed up on security. So unknown, there's some speculation and theories that it could be related to LastPass, which is that password manager. If basically if you've imported that or saved a copy of your private key in a password manager, in this particular case LastPass, it was compromised, then that might be one cause. The other one was these folks have entered their private key on MetaMask or some other wallet, and so that exposes the private. Basically, if the private key has touched the cloud or the internet, then it could be problematic. So yeah, pretty weird, I'd say, that we haven't gone to the bottom of it. I think there's an ongoing team that is interviewing and collecting, kind of diagnosing a lot of the affected users. I think this particular attack has drained over 5,000 ETH, and it's been going on for a while, apparently. So I was up late last night reading one thread from a particular individual that, said, hey, look, I panicked. I saw Tay's tweet, and I was migrating some of my assets on Arbitrum, and was detailing how, this person is very, I would say, sophisticated, like top 5%, top 1% in terms of their security practices, like air gapped computer, particular like separate computer just for crypto, running an operating system, not Windows, not Mac. I forget the exact name, but pretty beefed up and knowledgeable. And I was unfortunate. I think he lost 5 ETH, but it seems like that. And he then admitted to it after, was that he just kind of inputted like one of the addresses onto the Orbiter bridge contract was whitelisted. And so he kind of just flipped and didn't really check. So it was his mistake, likely not related to this other attack that Tay's talking about. But yeah, it was, I'd say it's been, to say that a few of us have been on edge is trying to understand what's going on is a bit of an understatement. I hope we get to the bottom of this fairly soon. And so the thing that we do know, just to kind of wrap this up and let me know if you have other input here, is it seems to be like old wallets. So maybe it's something related to key generation of these particular wallets.
No, there are some though that were created in 2020 and 2021. I think
right. There are some that were. So
but it
anyways,
does seem like the folks getting hacked are like pretty crypto native, pretty OG folks.
Yeah.
The scary thing. Yeah.
So anyways, what to do is sort of in these moments is probably the biggest question that folks have. And I retweeted one particular one, which I tend to agree with this kind of practice, which is, look, don't panic. If you are going to do something, be very vigilant on, say, for instance, you assume, okay, maybe there's a 0-day exploit in like the compromised version of Mask hit all these users at one point. What do you do, right? If you, first of all, get a hardware wallet, and if you're not using a hardware wallet, I think this is a good opportunity to then perhaps consider buying a hardware wallet and get familiar with how to use it. There are a number of out there in the market. And then as an added step of security, you can use like a Gnosis safe, which, you could get multiple, say 3 or up to, I don't know, say at a minimum 3 hardware wallets separate, each with their own private key. And you have to sign, 2 out of 3 or 3 out of 5 or whatever logic. And so in the event that one particular private key gets compromised, your assets are still safe, presumably if the other 2 or 3 private keys that have been generated in a secure manner haven't been compromised, right? And so, that's point number 1. Point number 2 is, I think, this Horcrux model that you guys have heard me talk about. That I love Harry Potter. Horcrux just means, Voldemort shredded, split his soul in 7 different Horcruxes. Same with your wallet, right? You never want to have just all your assets in one particular wallet. Maybe consider splitting them in different places, right? And so, yeah, those are probably the 2 biggest, things that I would do, right? And so, the last comment here I'll say is, maybe what I'm thinking is a lot of these guys, people that have been affected, even though they created their wallets a long time ago and they're OGs, they're supposed to be like really crypto native. When you're creating a wallet back in the day, like maybe you didn't think much, right? People that minted punks were like, oh, maybe I'll use a hot wallet. And same with it. A lot of people are trading their NFTs through a hot wallet. By the way, I'm not suggesting you do, but and then didn't think much of it. And then 5 years later, those 10 crypto punks are worth a pretty penny, right? And so I think you always need to go back and adjust your security parameters based on the value that is being secured.
Yeah.
And sometimes, so a lot there.
This is a particularly scary one in my mind, because it's people who have like every variable. There's people who have touched multiple different so like this isn't just people on a Mac. It's people on Mac and PC. It's not just Android or iOS. It's Android and iOS. It's not just MetaMask users. It's Ledger Live, MyCrypto, Exodus, Electrum, Coinomi, Coinbase Wallet folks, MetaMask. It's not just people who stored keys in cloud storage or password managers. There were people who who got hacked, but definitely didn't store the keys in a cloud storage or password manager. Sometimes they had multiple accounts. Sometimes it was only one account. So this is definitely a concerning one. I think the first thing to do, by the way, Santi, before you go create the Horcrux, just create a new wallet. First things first. Like if you hold a bunch of coin in one wallet, just go create a new wallet. It takes 2 minutes, and move your stuff carefully into that new wallet and minimize where you send and store your recovery phrase. And don't keep all your coins.
Check your approvals. Check your approvals. This happened and was important during the sushi contract exploit. The new master chef that got deployed. You always got to check your approvals. Well, as it relates to creating a new wallet, I would say create a new wallet under a new private key, not private key, because if people have access to your private key, then it doesn't really matter. So yeah, I think we'll continue to pay attention to this. If Tay wants to come on and discuss further, would love to have her on. I think she does incredible work for the ecosystem. The important thing here is, if you're gonna move stuff, always verify the contract you're interacting with and the receiver. So even if you have a hardware wallet, what happened to this particular person yesterday was he or she didn't check the send address. And so this has happened to a number of people that are very sophisticated way back in the day. It happened to Hugh from Nexus, right? He had a compromised version of MetaMask. He opened an attachment, new corrupted version of MetaMask, and then that swapped it to address. He didn't check. He was using a claiming transaction, nothing, and then boom, his wallet gets drained. So always check the to function. And when in doubt, just take time, breathe, and be calm. I know it's hard. So it makes you wonder, these are the moments where you're crypto's not easy. And every once in a while, you have to really pay attention to this stuff. And I certainly become more aware of what happens in the cybersecurity community writ large. People there's a recent security upgrade across iOS, that Apple had to patch, and it was discovered by this white hacker group. So you have to pay attention to all this stuff, and sometimes it could be a bit stressful. I say.
Yep.
we're not immune to stress. It's
breathing pretty heavy over there, Santi.
No, man. I mean, I don't know what to say. Like, I usually every time you think you've seen it all in crypto, you're just like, no,
Yeah.
definitely not.
Yeah. Anything else, man?
I did want to mention something, but I'm blanking right now.
Don't think too hard. Were you trading Pepe? Were you
No, there's like this whole discussion around like all these altcoins. I sort of missed the boat on that, to be honest. I wasn't paying too much attention, but apparently it, I think it was a good indicator that the market was feeling a little toppy and frothy. And so I think the day after Pepe, like the market just kind of like, okay, we've had enough of this irrational exuberance. Let's go down 6-7%.
Yeah.
Rinse,
you see, there was a searcher from with the ENS address Jared from Subway. Jared from Subway.eth made 12,000 transactions in a 24-hour span. At one point, Jared from Subway was taking up 7% of all the Ethereum block space. And I think it was on Wednesday. I think it was yesterday that this person had a trading volume of 700 million WETH or WETH, whatever I don't know how you pronounce it, 200 million Pepe and 100 million Wojak. And there was one sandwich that I saw that made a cool 30K one trade. So good work, Jared from Subway. Made $1 million on Tuesday.
Wow.
Yeah.
What bear market?
Oh,
one other like minor tidbit now I remember. So Tesla apparently is holding what 300 million or so of Bitcoin in the first quarter, because I think the earnings came out and they haven't touched a single one. So they just kind of keep holding it. So it's fairly interesting.
Tesla or MicroStrategy?
Tesla.
Oh, interesting.
Tesla. I mean, MicroStrategy holds like 1% of all Bitcoin, right? Which is way more than that. But no, Tesla has some Bitcoin on their balance sheet, and they at least this quarter, when the earnings came out, that was one piece of interesting tidbit that came out.
True wrap?
I think so. Short week, but
what are you doing this weekend?
Nonetheless. Sorry?
What are you doing this weekend?
I'm going to try to run.
Nice.
I run. I'm just going to go for a run.
Just escape your thoughts. Nice.
What are you doing?
Hanging, relaxing.
Married life, I guess.
Nothing exciting. I'm getting dumplings in Chinatown tonight or tomorrow night.
New York has great dumplings, don't they?
Great dumplings. Yeah.
Nice.
Yeah. Did Flushing Queens for some dumplings last week, and this week going to Chinatown. So
you like assess
big dumplings,
dumpling.
Big dumplings. Just
dumpling. What's your favorite dumpling?
I like the soup dumplings.
But like, what's the inside of the dumpling?
Oh, like a good pork dumpling.
Nice.
Yeah.
Nice.
Wow, that's how you know it's been a slow week, is when we're talking dumplings.
I know. Well, I think this is a good way to wrap it up.
Right,
folks, whether you like dumplings or not, whether you're going to go running or not, have a great weekend. And we'll be here next week. We have some good lineups next
Monday,
week.
we've got a banger. Oh no, Tuesday, banger of an episode with Doodle CEO. Right. Santi woke up and chose violence that day. So it was a tough interview, I'd say, that you led there, Santi.
Talking at this point, people, I think people appreciated some of the questions that we've been asking some of our guests. There was a comment that we were just like really all pro crypto and bullish, and we always like to keep a balanced discussion, but sometimes, you got to ask normal questions. And if those come across as tough, I'm sorry. We're just trying to get to the truth here and, push the space forward. That's all we're really trying to do here, folks.
See you Tuesday, folks.
All right. Thank you, everyone, for listening. Have a great weekend.